You know that feeling, right? That little jolt of adrenaline watching an altcoin you almost bought suddenly surge, leaving you with a touch of FOMO.
Oh, yeah. Definitely felt that.
Or, even better, the sheer satisfaction of being truly ahead of the curve, spotting a hidden gem before the rest of the market even whispers its name.
That's the dream, isn't it?
It's that chase for the edge, that elusive sense of understanding the subtle whispers of market sentiment and well, the seismic shifts in narrative that can propel an asset to dizzying heights.
Absolutely. Those narrative shifts are key.
I know I've had my share of both those moments and wished for more of the latter, obviously. Okay, let's unpack this. Today, we're diving deep into a topic that feels both futuristic and incredibly relevant right now.
It really is happening now.
How traders are beginning to experiment with powerful artificial intelligence tools, particularly advanced language models like ChatGPT, to predict altcoin pumps.
Yeah, trying to see what's coming next.
Imagine having a hyper-efficient, always-on AI as your personal market analyst, sifting through mountains of data and pointing you towards potential opportunities.
It sounds like science fiction almost.
It does. But the reality is, it's becoming a tangible, hotly debated pursuit in the crypto space.
It's truly compelling to witness how quickly this concept is moving from, theoretical discussion to actual practical application.
It feels like it accelerated really fast.
It has.
Mhm.
Our deep dive today is all about peeling back the layers to understand the very real, tangible ways AI is being applied in the lightning-fast world of crypto trading.
So what are we actually looking at?
Well, we'll explore its potential impact on market dynamics and, most importantly, consider what all of this ultimately means for your own journey in crypto.
Whether you're a seasoned trader or just curious.
Exactly.
Mm.
Whether you're deep in the charts or just intensely curious about this cutting-edge intersection of AI and digital assets, we're looking at how this technology aims to arm retail investors with sophisticated analytical power, transforming AI into an invaluable trading assistant.
And to guide us, we've pulled together an incredible stack of sources. We're talking about everything from deep dives into the nuances of sentiment analysis,
Reading the room, basically.
to the nitty-gritty of on-chain data metrics.
Following the smart money.
And even fascinating real-world case studies. Yes, those wild meme coin rallies that often defy traditional logic, but are absolutely sentiment-driven.
Those are perfect examples, actually.
This isn't just academic. These are methods being tested, refined, and deployed in real time right now.
In the wild, as you said.
So get ready to explore what could very well be the new frontier of crypto intelligence. So let's kick things off with the fundamental idea that's igniting all this excitement. At its core, we're observing a significant shift, aren't we?
A really big one, I think.
Traders are increasingly leveraging advanced AI, with sophisticated language models often at the heart of these systems, to process and analyze truly enormous, diverse data sets.
And it's not just price charts anymore, is it?
No, not at all. We're talking about sifting through global market sentiment, identifying nascent narratives around specific projects.
Spotting the next big theme before it takes off.
Exactly. And dissecting complex technical indicators across thousands of assets, the overriding objective.
Well, it's about getting that edge, right?
To gain a significant informational edge, to anticipate those altcoin price movements, those coveted pumps, before they become common knowledge.
Before the mainstream crowd piles in.
Right. It's an ambitious pursuit trying to quantify and predict the often unquantifiable forces driving these crypto markets. Now, why do you think this promise of AI holds such immense appeal, especially for the average retail investor?
Well, historically, financial markets, including crypto, have always suffered from an asymmetry of information, haven't they?
Definitely. The big players always seem to know first.
Right. We've seen whales, large institutional players, and quant funds wielding proprietary algorithms, exclusive data feeds, massive teams of analysts.
Things the average person just can't access.
Exactly. This has given them a distinct and often insurmountable advantage. Retail investors, on the other hand, are perpetually seeking that elusive edge.
Anything to help navigate the chaos.
Anything that can help them navigate this complex landscape more effectively and make truly informed decisions. AI, in this context, whispers a powerful promise.
Which is?
The democratization of sophisticated analysis. It suggests a future where individuals, armed with these tools, could potentially perform analyses that were once exclusive to multi-million-dollar hedge funds.
So it's about leveling the playing field.
That's the alluring vision, yes.
Okay, but is it really that simple? Could this truly usher in an era where the market is fair for everyone?
That's the million-dollar question, isn't it? This promise of democratized access is incredibly powerful, but it naturally leads us to some deeper questions and, frankly, fascinating areas of speculation.
Yeah,
Well, could this truly make the market fairer, where the individual stands on par with the institution? Or is it merely shift the advantage?
how so?
Meaning the edge now goes to those who are most adept at utilizing, prompting, and interpreting the outputs of increasingly complex AI models.
So it's not just having the AI, it's knowing how to use it best.
Precisely. It's not simply about having the tool, it's about mastering its nuanced application. For instance, consider the challenge of prompt engineering crafting the perfect query to get meaningful insights from an AI. That's a skill in itself.
Right, I could see that.
Then there's the question of computational resources. Will the most powerful and therefore most expensive AI models become the new gatekeepers?
Creating a different kind of information inequality.
Potentially. This also forces us to consider whether a market flooded with AI-driven insights eventually becomes so efficient that profitable opportunities are arbitraged away almost instantly.
Or does it just create new kinds of advantages?
Or does it simply create new layers of complexity and new advantages for those who are most innovative in their AI strategies, like anticipating other AI-driven market behaviors?
Wow. So the landscape isn't just evolving, it's like fundamentally restructuring.
It really feels that way. It's undergoing a fundamental re-architecture. And another critical aspect, if we zoom out a bit to the broader context, is just the sheer volume of information in the crypto market. It's
I've been
overwhelming.
always on torrent, totally.
Think about it. Every single minute, there are countless news headlines breaking, literally thousands of social media posts across platforms like X and Reddit, Discord, Telegram.
Plus all the on-chain stuff, technical charts.
Exactly. An unending stream of on-chain metrics, technical charts, analytical reports being generated for thousands of different assets.
For a human, even a team, processing that in real time.
It's quite simply impossible, which begs the crucial question. How can any individual hope to cut through all that noise, identify the truly key signals, and make timely, informed decisions without getting lost?
Drowning in data.
Precisely. This is where AI steps in as an extraordinarily powerful tool. It's uniquely designed to sift through that overwhelming volume of both structured and unstructured data,
Finding patterns humans would miss.
identifying subtle patterns, nuanced sentiment shifts, emerging narratives that would be completely invisible to the human eye, or at best, take an immense amount of time and effort to uncover.
And it's not just the volume, is it? It's the speed, too. I mean, in a market where milliseconds can matter.
That human processing bottleneck is a huge problem.
Can you give us a clearer picture of that scale? What's AI actually dealing with?
Absolutely. To truly grasp the scale, think about the hourly output. Potentially hundreds of thousands of tweets discussing various tokens, thousands of Reddit threads debating fundamentals or memes,
News articles, blogs, dev updates.
constant stream of on-chain data showing wallet movements, transaction volumes, smart contract interactions. Each tiny data point could hold a clue.
With that AI, you'd need an army.
But literally, an army of analysts working around the clock just to read a fraction of it. AI's processing power is unmatched. It can ingest, categorize, synthesize, and analyze this massive inflow at a speed and scale no human team ever could.
It's not just reading, it's understanding.
Exactly. Understanding the relationships between diverse data points, identifying correlations, spotting anomalies that signify a potential shift
Moving beyond gut feelings.
into a realm of truly data-driven insights at an unprecedented pace. Hashtag how ChatGPT becomes your crypto trading assistant.
Okay, so let's get into the nuts and bolts then.
Right.
How exactly do these modern AI tools, often using things like ChatGPT, become your personal crypto trading assistant?
One of the most powerful and immediate applications is in what we call sentiment analysis.
Reading the room, like you said.
Pretty much.
Mhm.
Imagine giving an AI the task of being your vigilant eyes and ears across the entire internet, scanning X, Reddit, Discord, Telegram, news headlines.
What's its main goal there?
Its primary goal is to identify emerging hype cycles, gauge the collective mood, and assess the underlying emotional temperature around specific projects or the broader market.
Kind of taking the internet's pulse.
Exactly. Discerning whether the crowd is building excitement, growing fearful, or just showing indifference.
And this goes way beyond just counting keywords, right? It's more sophisticated than that.
Oh, much more. It's not just counting positive or negative words. The sophistication lies in its ability to understand nuance, detect sarcasm or irony.
Which is huge in crypto chatter.
It really is.
Yeah.
And truly grasp the underlying emotional current that drives discussion. For example, a phrase like, "this coin is dead," is that genuine FUD or sarcastic?
Right, context is everything.
And AI, especially with advanced natural language processing or NLP capabilities, is getting remarkably adept at distinguishing between these subtle emotional undertones.
Which are often the real precursors to price action.
Often, yes. Can you elaborate a bit on how it does that, beyond just the key words?
That's a great question because it really highlights the sophistication needed. These advanced models aren't just looking for keywords. They're often trained on vast data sets of human conversation and text.
So they learn how language actually works.
They learn context, semantic relationships, even the emotional tone of a sentence. They use techniques like transformer models, which weigh the importance of different words to understand the overall meaning.
And they can understand new topics, too.
They can use zero-shot learning, meaning they can interpret sentiment on topics they haven't been explicitly trained on just by leveraging their broad understanding of language.
Wow.
This lets them differentiate between genuine excitement, building around a project, maybe detailed discussions about utility, versus cynical manufactured hype.
Like just repetitive shilling or memes. Exactly. It's about building a comprehensive emotional profile for an asset, discerning patterns that precede actual market movements. Similar to what specialized services like Lunar Crush provide, but potentially with even deeper contextual understanding of the narrative. And moving beyond just sentiment, another incredibly impactful application is AI's ability to perform narrative detection.
Spotting the next big story.
Precisely. We've seen time and again how powerful narratives are in crypto. They can fundamentally precede and even drive major price movements, sometimes completely independently of pure technical analysis.
They really take on a life of their own.
They do. And AI can identify these emerging themes, these stories the market is beginning to tell itself often, long before they become mainstream talking points or hit the big crypto news outlets.
It's like a crystal ball for market focus.
Almost like having a predictive lens into the collective consciousness of the crypto community.
That's a fascinating thought. Can you give us some concrete examples, maybe from the sources? How might an AI spot these narratives early? Because humans often only catch on late.
Absolutely. Consider the explosive rise of AI tokens themselves over the past year or so.
Yeah, that was huge.
Or the increasing buzz around real-world assets, RWAs, gaining utility on-chain. Or even the highly cyclical yet undeniably powerful meme coin season.
So how does AI spot the start?
An AI system can spot the genesis by tracking subtle shifts in language patterns, the increasing frequency and contextual usage of certain keywords across diverse platforms.
Like seeing RWA pop up more and more.
Exactly. And the growing engagement around specific concepts within niche communities. It might identify a sudden spike in discussions around tokenizing physical assets or decentralized AI computation in obscure Discord channels or Telegram groups, maybe correlating these with early social engagement metrics.
So grassroots trends bubbling up.
Exactly, often before they hit the front page of CoinDesk.
Yeah.
This capability moves beyond simple data points. It's about understanding the actual story the market is telling itself.
Giving a unique vantage point on where capital might flow next.
And before the crowd is even aware a new trend is forming.
Okay, so it understands the present and the emerging future. What about the past? Can AI help us learn from history?
Definitely. Beyond just understanding current sentiment and narratives, these AI tools are proving incredibly powerful for learning from the past to inform future decisions. Specifically, backtesting strategies.
Explain that a bit more.
Imagine using AI to meticulously analyze historical price patterns for a particular altcoin, looking at how it behaved under similar market conditions in response to specific news or during certain sentiment shifts.
And then comparing that to now.
Yes, comparing those historical setups to the current market configuration. Essentially asking, given what's happening now and what's worked or failed in the past, how might this play out?
The level of analysis there sounds pretty deep.
The in-depth analysis enabled by AI here is truly invaluable. It allows traders to rigorously test if a particular signal or a specific combination of signals would have been profitable historically.
So you can see if your idea actually had merit back then.
Precisely. It's like having that time machine for your trading ideas, letting you iterate and refine your approach without ever risking a single cent of capital.
You can run simulations.
Thousands, even tens of thousands of simulated trades based on your hypothesis, Adjusting parameters like entry points, exit strategies, stop-loss levels,
That feels like a crucial validation step.
absolutely crucial. Instead of just guessing that a certain pattern might work, you use AI to quickly sift through years of data to see if it actually did work and under what specific conditions,
Imagine running all those sims instantly.
refining your approach in a fraction of the time a human could. Building confidence, honing your strategy before you ever put real money on the line. It's an incredible leap in analytical power. And this naturally leads us to another crucial consideration: risk management.
Right, it's not just about finding pumps, it's about not getting wrecked.
Exactly. Beyond just predicting pumps, how can AI help us mitigate potential losses? Because in trading, it's profoundly about managing the downside, protecting your capital.
So AI can help with that too.
It can extend its predictive and analytical capabilities into the realm of risk management, offering a more robust, data-driven, and less emotionally reactive approach.
How specifically? Can it help set stops or something?
Yes, among other things, AI can be used to simulate countless different scenarios for entries, exits, and even position sizing, all based on varying market conditions and potential outcomes.
So modeling what-if scenarios.
Precisely. If you're contemplating an entry, AI can model what happens if the price goes up 10%, down 5%, sideways, considering historical volatility and correlations.
Giving you probabilities.
It helps you understand the probability of various outcomes and how they might impact your portfolio based on different position sizes, factoring in things like liquidity and slippage.
And optimizing stop losses.
It can help optimize stop-loss placements by analyzing historical price action and volatility to identify levels where a reversal is statistically less likely.
So moving beyond just gut feelings on where to put a stop.
Exactly. Instead of relying on gut feelings, which are notoriously unreliable under pressure, AI provides a data-driven approach.
Yeah.
It lets you proactively anticipate risks, optimize stops, and build a more resilient, less emotionally reactive strategy.
Turning something subjective into something more objective, more calculated.
That's the goal.
Before we dive deeper into the fascinating market-wide implications of all this AI integration, we just wanted to take a quick moment to chat with you directly.
Yeah, just a quick pause here.
If you're finding this deep dive valuable, if you're having those aha moments, or maybe just enjoying the conversation and learning something new,
We hope you are.
then hitting that like button, subscribing to the channel, and tapping the notification bell truly makes a huge difference to us.
It really does. It's a small click for you, but it means a lot.
It significantly helps us reach more curious minds like yours. Your engagement essentially boosts our visibility in the algorithm, letting more people discover these in-depth insights.
And quite simply, it enables us to keep creating this kind of quality crypto content for you week after week.
Your engagement is what powers these explorations, and we genuinely appreciate it. Thanks for being here.
Okay, back to the market dynamics.
Right. Here's where it gets really interesting, I think, where the implications for the broader market become truly profound.
The ripple effects, yeah.
Historically, as we touched on earlier, sophisticated financial institutions, those quant funds and institutional whales, have enjoyed a massive advantage.
Access to tools and data others didn't have?
Exclusive access to incredibly advanced algorithms, massive proprietary data sets, computational power, just out of reach for retail.
Totally.
But now, with the advent of accessible and powerful AI tools, retail investors are truly getting, well, a fighting chance, maybe.
It feels like giving everyone a professional-grade microscope to examine the market instead of just blurry binoculars.
And what's truly compelling here is how this democratization of advanced analytical power could fundamentally empower individual traders.
Reducing that information asymmetry we talked about.
Right. Instead of reacting to news after it's been processed by institutional desks, retail traders, armed with AI, could potentially identify emerging trends, sentiment shifts,
Even early accumulation pattern.
at a much earlier stage. This isn't just about making better individual trades, it's about potentially altering the power dynamics of the market.
Leading to a more level playing field.
Potentially, though maybe more complex and volatile too. But this raises a critical question. Does democratizing access truly level the field?
Or does the advantage just shift again?
Exactly. Maybe to those who can afford the most advanced AI, or train it on non-public data.
It's a dynamic tension for sure. It absolutely is. And this leads to a fascinating and potentially transformative dynamic. If we connect this to the bigger picture, What happens if more and more traders,
Not just institutions, but lots of individuals.
a vast number of individual participants, are all identifying the same signals earlier, thanks to their AI assistants?
What happens then? Things move faster.
This could dramatically accelerate pump cycles. The window of opportunity to profit might become significantly shorter and far more intense.
So instead of a slow buildup.
We might see rapid, almost instantaneous surges driven by collective AI-fueled action.
Wow, like a flash mob of traders acting on AI insights.
Sort of. Imagine an altcoin starts its ascent and within minutes, maybe seconds, a critical mass of AI-informed traders jump in, pushing prices up much faster and with greater force than we've ever seen before.
That sounds intense.
It would necessitate even quicker reactions and more agile strategies from everyone, making the market both exhilarating and potentially far more challenging for those not using such tools.
A whole pace could just increase exponentially.
Truly putting the fast in fast-paced crypto trading.
Oh.
But it also raises a concern.
Which is?
In such rapidly accelerating cycles, how do human traders, or even less sophisticated AI models, avoid being simply liquidated, especially if they're a step behind?
Yeah, it could increase volatility and lead to sharp corrections too.
Definitely a possibility.
That's a profound point about acceleration, and it leads directly to what you mentioned earlier, the alpha paradox.
Right.
If everyone is now armed with AI, constantly hunting for these inefficiencies, doesn't that edge, that unique alpha, just quickly disappear? It feels like a race to the bottom, maybe?
That's precisely the dilemma. If everyone starts using AI to predict pumps, if these sophisticated tools become ubiquitous, does the alpha, that unique predictive edge, eventually disappear, or at least diminish much faster?
It's a classic market efficiency problem.
It is. The more widely adopted these tools become, the more quickly any market inefficiencies are arbitraged away, if everyone sees the same signals.
The signal loses its power because the market adjusts instantly.
Exactly. What was once alpha becomes common knowledge, and thus priced in very quickly.
So what's the implication? People stop using AI.
Probably not. The implication here is that this situation wouldn't necessarily stop people from using AI. In fact, it would likely fuel continuous innovation in AI application.
Ah, so you need to keep getting smarter with it.
Traders would need to constantly refine their prompts, develop more complex multi-layered AI strategies, or seek out new, less obvious, or maybe proprietary data sources for their AI to analyze.
The edge wouldn't be in having AI, but having better AI strategies.
Or more unique ones. Or combining AI insights with truly novel approaches. It pushes the frontier of innovation, turning the market into a constant arms race of AI capabilities.
Making it harder and harder to find consistently profitable signals long term.
You would have to constantly be evolving your AI approach just to keep up.
So this isn't just a ripple, it really is a tidal wave affecting everyone. Let's look at the impact on different players. For retail traders, the promise is clear.
Access to powerful tools they never had before.
These AIs can crunch numbers, analyze sentiment, spot narratives, significantly augmenting their individual capacity. However, there's a crucial caveat we keep seeing highlighted.
Don't just blindly follow the AI.
Right. They must be cautioned against an over-reliance on AI predictions. An AI is a powerful assistant, a co-pilot, but it's not a guru.
Not an oracle, yeah.
Understanding its limitations, validating outputs, still applying critical human judgment remains paramount. It's about augmenting intelligence, not replacing it.
Especially with black swans or, deliberate misinformation. On the institutional side, it's a somewhat different story, isn't it?
How so? They're already using it heavily.
For these larger players, it's not a future possibility. It's a current reality. They're likely already deploying AI for market making, high-frequency trading, sophisticated sentiment analysis.
Not just for predicting pumps, then.
No, they use AI for optimizing vast portfolios, managing liquidity across exchanges, executing complex arbitrage strategies at speeds humanly impossible.
So while retail is gaining access,
Institutions are continually pushing the boundaries of AI capabilities, suggesting a new kind of arms race is well underway,
competition intensifying on both sides.
leading to an even more complex and interconnected market.
And what about the builders, the Web3 developers and entrepreneurs?
This creates a whole new entrepreneurial frontier for them. A significant new product category could definitely emerge: AI plus crypto trading tools.
So huge demand for people who can blend these techs.
Massive demand for developers who can integrate cutting-edge AI into user-friendly platforms, build specialized AI agents for autonomous trading,
Or even AI-powered DAOs.
or even create decentralized autonomous organizations, DAOs, that are governed and optimized by real-time AI insights. The entire Web3 ecosystem will naturally evolve to support these tools.
Creating opportunities for innovation, attracting new talent.
A whole new wave focused on blending AI with blockchain and crypto. #tag real-world case studies and analytical firepower.
Let's talk about some real-world examples now, ones that really drive home the power of AI in this context. How about those explosive meme coin rallies?
Yes, DATO-GE, SHIB, PPP, TIBUF.
These rallies, let's be honest, were driven almost entirely by social sentiment, viral community engagement, memes.
Traditional analysis kind of goes out the window there.
Totally. But AI tools have the undeniable potential to catch these much, much earlier.
How would that work? What would the AI be looking for?
Imagine an AI system constantly monitoring social media, not just for keywords, but for patterns of engagement, the velocity of information spread.
The virality of specific memes.
Yeah, or a sudden surge in community excitement around a seemingly obscure token. It can detect the groundswell of online chatter, meme propagation across platforms.
That buildup of community enthusiasm.
Right, that often fuels these tokens from obscurity to stratospheric valuations, while a sharp human might spot a few early signs.
AI can synthesize a much broader range of those subtle social cues.
Identifying the nascent stages of a meme coin frenzy before it truly explodes. This is where AI's ability to process unstructured data, understand context, identify emotional patterns really shines.
Offering a distinct advantage in those often irrational, sentiment-driven markets. And it's not just about micro trends like individual meme coins, is it? It can track bigger picture narratives too.
That's right. What's truly insightful is how AI can even track the trajectory of broader narratives as they morph into global phenomena. Take WorldCoin, for example.
That was a big one. Merging AI, crypto, UBI, identity.
It successfully merged that powerful AI plus crypto narrative with concepts of universal basic income and global identity into a massive global story, attracting intense interest and debate.
And AI can track how those narratives take hold.
AI can identify when such powerful interconnected narratives begin to gain traction, when they achieve critical mass. It can track the emergence of core concepts, AI, human identity, economics, privacy, and observe how these discussions resonate across different demographics, regions, contexts.
So it's analyzing how the story itself is built and spread.
Exactly, how these complex narratives are constructed, disseminated, received, providing insights into their potential to attract attention and, crucially, investment.
It's not just about single tokens then.
It's about understanding the macro narrative landscape of the entire crypto space. By identifying these overarching themes and their resonance, AI offers a predictive edge not just on single assets, but on entire sectors or categories.
Seeing the forest and the trees. Understanding the interconnectedness of ideas driving capital.
Precisely. And we don't even need to look far for proof of concept. It's happening now, right?
Absolutely. The present is already showing us this in action. Many crypto Twitter trading bots are already a thing.
And some are actually outperforming humans.
Some of them already demonstrably outperform human traders by reading sentiment and acting on information far faster than any person could. This isn't just theory, it's actively happening.
Bots monitoring feeds, analyzing sentiment, executing trades.
With incredible, almost instantaneous speed.
The analysis here just highlights that speed and efficiency advantage, doesn't it?
Unequivocally. While a human takes minutes, maybe hours, to read, understand, cross-reference, decide.
An AI bot does it in milliseconds.
This real-time processing of vast social data, identifying sentiment shifts, trending topics, early calls to action, gives them a formidable edge.
Acting on info before humans even grasp it.
Turning fleeting opportunities into profitable trades with unparalleled agility. It's like having thousands of analysts working simultaneously and reacting instantly. And expanding on that, AI's analytical firepower isn't limited to just social sentiment or memes. It can dig much deeper.
Into more complex financial data, like derivatives.
Exactly, particularly from derivatives markets. For instance, AI could spot unusual funding rate spikes or significant changes in open interest on DXs like DYDX or GMX or even CEXs.
And those are leading indicators.
Often critical ones, yes, signaling an impending price move. A sudden sustained spike in funding rates, for example, could indicate incredibly strong bullish or bearish sentiment.
Which often precedes a move in the spot market.
Frequently, as traders anticipate or are forced to unwind positions.
So AI can handle that complex stuff too.
This capability powerfully illustrates AI's ability to analyze a much broader spectrum of sophisticated financial data. Our sources explicitly highlight funding rates and open interest, as key metrics.
Which are hard for humans to track effectively across everything.
Incredibly demanding and prone to error. AI automates this, providing a sophisticated layer of market intelligence, identifying high-probability moves based on professional positioning and leverage.
It's a fusion of technicals and market psychology at scale.
A powerful fusion, yes.
Okay, let's really paint the picture of the data feast AI works with. It's not just one thing, right? It's combining lots of different inputs.
It's definitely multifaceted, not one magic bullet.
For example, AI can track Google Trends data, looking for search interest spikes for a token and correlating that with price action.
Public curiosity often precedes a pump.
Right. As broader interest builds, AI can even differentiate general interest from actual buying intent sometimes.
And then there's the on-chain world.
Yes. The rich world of on-chain wallet activity. Insights from places like Glassnode and CryptoQuant show AI can be trained to spot patterns when whales are accumulating.
Spotting smart money moves before retail.
Often long before retail catches on. Imagine AI identifying large, dormant wallets suddenly activating, transferring sums, or accumulating a specific altcoin without selling immediately.
Subtle accumulation patterns.
These sophisticated patterns visible on-chain can be incredibly powerful early signals. AI can track wallet age, transaction sizes, fund flows to identify these shifts.
What else is in the mix?
AI can also analyze the relationship between ETH BTC dominance and altcoin rallies. Historically, there are clear correlations.
Signaling the start or end of alt season.
Potentially. When dominance shifts, it often signals capital flowing from majors into alts or vice versa. AI tracks these shifts, compares to history, provides alerts, understanding macro rotations.
And sentiment indicators.
And finally, yes, sentiment index heat maps like those from Lunar Crush. These are often already AI-driven, visualizing social buzz and sentiment.
But AI can go further.
AI can not only interpret these existing heat maps, but also generate its own, even more nuanced indicators by processing raw social data directly, creating multi-dimensional scores, positive, negative, conviction, intensity, source credibility.
Wow, that's comprehensive.
It demonstrates the truly multifaceted approach, combining social, on-chain, traditional market metrics into a holistic model, looking for hidden connections across seemingly unrelated datasets, #, broader Web3 and ecosystem implications.
This all raises a really important question, I think, about the very future of decentralized finance, of DeFi.
How so? AI gets integrated into DeFi protocols.
As AI becomes more sophisticated and deeply integrated, we could witness an unprecedented level of automation and intelligence woven into the fabric of DeFi itself.
They're not just simple bots anymore.
Imagine highly intelligent DAOs making treasury management decisions, executing complex arbitrage across multiple pools, or dynamically adjusting lending rates based on AI predictions.
Making DeFi more self-optimizing. Adaptive.
Exactly. The speculation here is that DeFi could become dramatically more efficient, more reactive, and undoubtedly more complex.
Give me an example.
A DAO managing a large treasury might use AI to predict market trends, then autonomously allocate assets optimally across various liquidity pools, yield farms, maybe even flash loans, all based on continuous AI insights.
Or AI spotting arbitrage instantly.
Identifying a fleeting opportunity across multiple DEXs and executing complex trades in milliseconds.
Right.
Far faster than any human.
So deeper integration drives more innovation in DeFi.
Pushing the boundaries of automated decentralized financial systems, making them not just permissionless, but profoundly intelligent and responsive.
And this AI insight isn't just for trading, right? It affects projects themselves.
Yes, it's also poised to profoundly shape how projects launch and market their tokens.
How? By tailoring messages.
If AI can effectively detect which narratives are gaining traction, then projects will naturally start to tailor marketing for AI-detected narratives, optimizing messaging, white papers, community engagement,
Aligning with what AI says the market wants to hear.
aligning perfectly with what AI models indicate the market is most likely to respond to.
That creates a really interesting feedback loop, doesn't it?
A fascinating one. AI not only predicts narratives, but also, through its influence on marketing, actively contributes to shaping and amplifying those very narratives.
A kind of self-fulfilling prophecy.
To some extent, AI becomes both observer and powerful participant in narrative creation. This means a new level of sophistication for token launches,
Moving beyond generic hype to hyper-targeted AI-informed storytelling.
resonating directly with the prevailing market mood, potentially making launches more impactful, maybe even more predictable sometimes. And what's truly compelling here, I think, is how this entire trend directly links existing AI tokens like FIT, AT, AGIX, BIT, and SOAR to undeniable real-world adoption and utility.
Ah, so it validates their purpose.
For a long time, their promise revolved around decentralized AI computations, data marketplaces, powering AI agents. But now, as traders are actively building and deploying AI models for crypto analysis,
The utility of those tokens becomes concrete.
their utility is undeniably reinforced. They're no longer just speculative assets based on future potential. They are increasingly the essential infrastructure, the computation, the data access layers, powering this new wave of trading intelligence.
So if you're holding these tokens,
If you're holding these tokens, this deep dive provides a clear and compelling pathway for their practical application and, consequently, their potential for growth. Their fundamental value proposition strengthens significantly.
as demand for AI-driven insights and the underlying resources surges.
It's a tangible bridge between the theory of decentralized AI and its immediate impactful application in a high-stakes environment like altcoin trading.
It's incredibly exciting to see such a direct use case emerge.
It really is. Hashtag tag tag outro.
Well, we've covered a tremendous amount of ground today, haven't we? Just trying to wrap my head around it all.
We really have. It's a huge topic.
We've explored how AI, especially these powerful language models like ChatGPT, is being leveraged by traders for everything from sentiment analysis and narrative detection.
To backtesting strategies and even risk management.
Right. We've talked about its incredible potential to level the playing field for retail investors.
But also how it could dramatically accelerate market cycles, making things faster, more intense.
And finally, we touched on its broader implications for the entire Web3 ecosystem shaping DeFi, influencing token launches.
And providing clear, real-world utility for those AI tokens themselves.
So what does all of this ultimately mean for you listening right now? Do you think AI like ChatGPT will genuinely give retail traders a sustained long-term edge in crypto?
Or is it just hype? Something that gets arbitraged away quickly?
Or perhaps an even more direct question. After hearing all this, would you trust an AI trading bot with your hard-earned portfolio?
That's the real test, isn't it?
We'd genuinely love to hear your thoughts and predictions in the comments below. Let us know what you think.
And that really raises an important question for us all to ponder as we consider the future of trading, doesn't it?
What's that?
As AI becomes more and more sophisticated in predicting market moves, what truly defines skill in trading anymore?
Good question. Does it change completely?
Does it fundamentally shift from traditional pattern recognition and deep fundamental analysis to the ability to effectively interrogate and interpret complex AI-driven insights?
Becoming less about direct analysis, more about understanding the AI.
And how to extract its wisdom? Or, perhaps even more provocatively, does skill evolve to anticipating the collective AI-driven market behavior itself?
Trading against the other AIs and the automated crowd. Wow.
It's something to deeply consider as this powerful technology continues to evolve and reshape the financial landscape in ways we're only just beginning to comprehend. Food for thought.